accounting information system needs to use adjusting journal entries in order to follow the accrual basis. Accrual basis requires that it records revenues and expenses when they are earned and incurred. There are two parts about the adjusting entries. The one is deferred revenue or expense. The second is accrued revenue or expense. The deferred revenue is defined as the cash is received before the company earns the revenue. One company received the cash, but they didn't give the service to the customer, so in the general journal, the credit was made to the liability account. And then when the company finished the service, the adjusting entries are recorded, which record the liability account decrease, but the revenue account will be increased. However, in the second way, this way is accept the credit was made to the revenue account in the general journal. And in the adjusting entries, the revenue account will be decreased, but the liability account will be increased. For example, the service given on October 5th, which means the revenue is already earned. So the adjusting entry requires to record the entry increasing the account receivables and serving revenue. On the November 2nd, when the cash is received, the journal entry should record that the cash account increased and the account receivable decreased. When cash is paid before the expense incurred is deferred expense. The insurance expense is a good example. In contrast, the accrued expense means the cash is paid after and the expense is incurred. Such as the telephone expense, we always pay the current month's bill in the next month. When the bill is received, we should record the telephone expense with the adjusting journal entries, and the entry both increase the telephone expense account and the telephone payable of liability. In the next month, when the cash is paid for the bill, the transaction records in the general journal. It expresses that the liability account decreased and the assigned account also decreased.